All right, welcome everybody. Thanks for being here. We got our rally cap on. Wonderful, absolutely incredible big number on employment. All right, let's take a look at what's going on here and what we said for this week. We've done two prior YouTube videos. We talked about this potential island bottom. We also talked about the algo strategies and the settings. Let me switch trade room pages here for you, if I may be so bold, and we'll go switch over to the algo room. All right, so we have another new equity high in our algo trade. You can see this is the 15-minute model, which we shared performance summary. Once again, performance summary, performance graphs, and since 9/26, so we go basically at the end of a quarter or monthly, we try to look at the ATRs, average true range, and modify or maintain. Not modify, not curve fit, maintain systems and all strategies. So we have another new equity high curve in the algo monitoring of our 15 minutes. So our trade room had, I guess, a couple people really enjoyed what is going on. We've got a new time buyer or user here in the ES, and already nice comments there, obviously. And what I would like to say is today we just had all kinds of things firing off. The short crude, it just took profits on half, got out of the other balance right there. A gold got out of half the profit, trailed the balance, got out of it there. It's short British pound. And as you can see, it took its profit right there. -2 and 0 means it took its profit. There is the trade. This thing is amazing, the algo optimizer. More importantly, the VIX, the 120-minute went short, and I'm sure you saw this from the video I've done earlier this week, but that's a good sign if you're looking for upside in spiders, which, by the way, our 60-minute spider generated a long position. So all of this is like really nice stuff for our traders in our community as we put, I guess, our methodology to test. More importantly, I wanted to follow up with how you can utilize these YouTube videos that I post and kind of follow or track and trade what we're doing. The newsletter, I do a weekly publication, as you guys may know by now. It's $100 a month, and it comes with access to our live trading room. So if you wanted to come into the live trading room, read the weekly newsletter, follow the trades that we put out, that's the overall plan. I also have shared with you, because there's a lot of stuff on the internet, I know that, and let me open up the newsletter and share with you our current positions. All right, so before I bring in the newsletter, I have it all here in a PDF format for you to watch. But basically, if you take a look at this screen, this is our main trading room, which is based off what's in the newsletter. The algo strategies are day trades and maybe swing trades that we're paying attention to. As far as the newsletter, pretty much everything you see on the screen here we have on. We have a small position on COP, and we're adding on a daily close greater than 6103. Now, here's a little secret for you. This is a 4-hour chart. This is a John person. I've been teaching this to traders for 15, 20 years. And every time I either have gotten together with other educators who have picked up on this and other traders have picked up on this, but it's pretty much half the day, and it gets you through the lunch hour. So if the market opens up at 9:30 cash market, 4 hours is what? 1:30 in the afternoon. That gets you through that lunch hour time period, right? So here we have an intraday 4-hour move on ConocoPhillips. This is the one that we already have a half position on. So look where it says, buy on a daily close greater than 6103. What does 61 represent? This huge area of overhead resistance that starts back from that sell-off that started back on September 20th. So we've gone through this whole period with no performance in ConocoPhillips since September. This is now December. So why would I be all of a sudden interested in ConocoPhillips? Well, first and foremost, the person's indicator, the PMC, started to see increase in relative strength. It's falling off today because the S&Ps are outperforming, but they're both up, but S&Ps are up more. So that's what that represents in the PMC indicator, all right? So this is the John person's this is my typical setup page using Thinkorswim with my indicators. PMC for stocks to measure its relative strength versus the S&P, a volume indicator, my person's pivots, and my PPS indicator. We're still in a buy mode. We're now in a potential breakout mode on a 4-hour basis. Let's look at the daily chart. Whoa, we're in a PPS buy, and we're going to break out. Relative strength's improving, and we have decent volume structure. So we're going to address that in 2 seconds. So everything here from a technical perspective, price, volume, relative strength, all of that is working for ConocoPhillips. All right, so let me put this back where it was, and let's take a look at some things here. Why are we focused, and where did we get off on looking at ConocoPhillips? Well, if you had joined our trading community, you would know that what we look for, and we kind of run scans, but look at the energy XLE today, right? And I want you to focus your attention on top to bottom. Best performer, Apache, Devon, EOG, Pioneer, and whoa, COP. So one of the top 5 performing stocks is the one that we've chosen. As far as sectors, XOP is another one. And XOP, energy today, after OPEC's decision to cut production, or try to at least, XOP, which has been in this insane declining wedge on a month-to-month basis. And I posted a chart on Twitter account weeks ago that shared with you why crude oil was going up, or not why, but it structurally showed the spread differential between crude oil going up and the energy sector XOP, oil and gas exploration, and oil services, OIH, declining. That decoupling effect, it's very rare to see that. One of 2 things has to happen. Either crude oil is going to go down, or people are going to start investing in the energy sector, and that's what we're betting on, that the energy sector breaks out of this massive monthly declining wedge formation. All right? So with that said, let's bring in the newsletter for you and go with what we've been doing. So we've been anticipating this, and this is what we talk about in our live trading room. In fact, if you look here, it said a couple of the stocks, and we posted this on the 4th at 10 o'clock in the morning, 47 minutes after the market opened, right? So you'll see EOG, PXD, Devon, and MPC, COP, and Oxy. Those are the ones to buy because they were showing relative strength and good volume appreciation in the market. So here's the funny thing, gang. It's not funny, but it's a very serious observation and part of what I tried to look at. And I think most traders do look at this as well. Good traders, at least. First and foremost, we take a look at not just the relative strength versus the overall market, but not just the price movement with the PPS buy signals and the pivot locations, but also I want to take a look at the volume that's going into the stock. So let's take a look at volume, and I'm going to correlate this for you. Now, if you look at Williams, if Williams and Company, it's in the oil and gas exploration sector, look at the daily 10-day average volume, 9 million. We're at 8 million already. Day's not even half over, right? Exxon, it's less than 60%. Marathon Oil, less than, it's about 40%. Oxy, 45%. Apache, get the point? Nothing really. Look at Schlumberger, ConocoPhillips, COP. Wait a minute. It's a little more than 50%. So the best, the strongest, most attractive relative to its 10-day volume is the one that we're looking at, and some of the stocks that are also in the XOP, oil and gas exploration. So that seems to be some of the refiners and the stocks in the XOP relative to their 10-day volume. They have better looking volume trends. All right, so that tells me that there's institutional money flow coming into the market. All right, now for our newsletter, and this is what I wanted to share, where do we put this information out? And let's get to it. All right. So for this week, we didn't want to really add. I said I will be looking to add to the energy position on further weakness, or more than likely be looking for end-of-week price recovery. So we are already in a 50% position. We were in a credit put spread in Oxy, which we took profits on that last week. That's what it says what we did last week, right? We also entered into long XOP small positions. Look at this. The March 2020, so we've got a little bit more than almost just about 90 days to go for this, right? A 24 strike paid 55 cents. We bought the 22s and paid $1.20. So you can play the option on XOP, and if we get a pop out of this market between now and the end of the year, the best time to buy energy, if the institutions are coming in, that's the one that's going to break out of that declining wedge. You're going to want exposure. With the jobs report that we just had, with the ECB out next week, the European Central Bank, global economies stabilizing, I would suspect that people are going to finally get money that's parked on the side back into this market. Where would you put money to work if the economy's growing and crude oil prices are stabilizing, if not rising? Right into that energy space. So that's probably a good way to play the market in what we're doing. We have position in Capri Holding, which is, again, Michael Kors and Jimmy Choo Choo shoes. If you go to the mall, look at his shoes. Anyway, we've got ConocoPhillips half position, and we're already in a profit. We're going to add to this on a daily close, or at least closer to today's close, greater up here. We're going to cost average in. We're not going to get the best price. We're going to get the best average price. We're going to average in as we start to see that money flow coming in the market. XOP, we have actually a 50% position there. We're going to also add to the XOP on confirmation of a breakout. So here, let me explain a confirmation of a breakout. So without getting too much of our secrets, and I'm sure you can follow this, this is the person's pivots. That's a doji. This is my signature high close doji pattern. A close greater than that high, but more importantly, greater than this last conditional change high. That candle right there is a last conditional change. If you don't know what that is, this book here, 15 years ago, page 264, talks all about the last conditional change. You want to read that. So this actually helps confirm a breakout. So we're closing greater than pivots. We've got upside volume, and we have sector participation, meaning lots of stocks in the upside. This is all good things that help give us confirmation that if you're going to put a trade on, these are the kind of characteristics that you want to see moving forward. All right? So yesterday we actually did a stupid thing. I got out of Red Rocks. We're long Wells Fargo. We're long Kellogg's, Tony the Tiger. We're long GE from $10, but while it was at $11.60, we bought an $11 put rather than put a stop in the market for March. Paid 60 cents. So anyway, that all was a good thing to do. We're again in the Russell. I've been pounding the table about buying the Russell, and the January effect should take over. And again, we made money in Nordstrom's, and we took the money out of Nordstrom's and applied the cash or the profits that we made in Nordstrom stock and put it towards a 40-50 strike, meaning long the 40, short the 50 for April because of the time. Took in a little theta, paid $2.50 for that bull call spread. The odds of Nordstrom's trying to get to anywhere above 42.50 by April. Let's take a look at JWN. It's having an okay day today. And you can see we've done our homework here. I call this an inverted potential head and shoulders. I mean, I like the volume trend too, personally. And let me get the newsletter out of the way. So this is kind of like shoulder, head, shoulder. There's your neckline. We failed to break out. And that's why when we got up there, right before that sell-off, I said, let's take the money out of the stock. And then just in case, let's go for longer-term upside and buy a call option spread. And that's what we did. I actually tweeted that out, and here we are. Now, it's having an okay day today, but it hasn't gone anywhere for the overall time period. I don't have to worry about it. It's kind of like a free trade, but needless to say, if we can finally get, and let's take a look at a higher time frame weekly chart here. I mean, I'm not too impressed with this volume trending lower, but again, this probably won't do much until we get into earnings report after the first of the year. We also have next week retail sales. That'll be important to see if retail sales, if we're seeing people buying into apparel and what kind of apparel. High-end, such as Nordstrom's. Nordstrom also has their outlet called Nordstrom's Rack. So I think Nordstrom's and Capri, out of the entire retail space with more people employed, I'm thinking they're going to want to get dressed up I don't think still to this day people can accept or go to work with the Mark Zuckerberg hoodie look, right? And even he got dressed up when he got his hiney called up in Congress, so he was in a tie. So therefore, I think the style coming back with people being, dressing like grown-ups again, so to speak, with button-down collared shirts, I think that's coming back versus showing up to work with cargo pants and flip-flops. So anyway, I'm not dissing Bobby Weir from Dead and Company or from Grateful Dead because that's his look, but sandals and cargo shorts. I'm just saying that I think that the retail apparel sector is going to explode, and with more Christmas parties coming up, company Christmas parties, New Year's parties, I think Nordstrom's and the higher end retail might be the winner, and that's why we've put money to work both in Nordstrom's as well as Capri Holdings. I hope you appreciate the sense of humor I try to bring to technical analysis and trading, and share with you the work that we do and why it's so vital that we've been helping so many traders, because there's a lot of things out there on the internet, and I know you know it. It's hard to find the real story, and this is. And by the way, we put down every single work week. Every single work week we follow up with what we're doing, and we follow up with our performance, good, bad, or indifferent. I'm kind of happy with the performance that we've had this year. We could always do better. It's been a really rocky year. Cumulatively, this number is off the charts. We're closer to 240% cumulative gain in stock only. And our options trades, we'll see where all of these new positions provide us. But that's our cumulative tally for our weekly newsletter. Thanks for listening, and I look forward to seeing you be one of my students and join us here at Person's Planet. Have a great week, friends.